Hello everyone and welcome to Frequently Asked Questions. So one of the ones I get a lot right now are, Kristen, if I offer over asking price, how much of that can I finance into the loan? Or Kristen, if my appraisal doesn't come in, can I finance the rest of that plus the closing costs and prepaids into the loan? And the answer is no, you can't put any of it into the loan, okay? So, and why? Why is that, okay? And this is the thing we're explaining is your loan is based on what we call loan to value. Your rate is even somewhat based on a loan to value. Your down payment is loan to value. So let's just say we're doing 5% down, okay? So if you're doing 5% down, you're at 95% loan to value. On a conventional loan, that's pretty much the max. We do have an option for 3% for our first-time home buyers or our more affordable loan product that we do. However, if you're just doing a straight conventional loan and your income limits go over that, then your minimum amount is 5%. Now, if you finance over that, you're going to be trying to finance at, let's just even say 100% to roll that appraisal in. You can't finance to 100% on conventional. They don't allow it. Same thing, FHA is 3.5%, VA is 0%, but now even with 100% loan to value, but again, that's their cap. You can't borrow 105% loan to value. So you can't put anything on top of it, all right? And then here's the other thing. Well, Kristen, it'll appraise out for higher, so there'll be equity there. And yes, I understand that some homes are appraising a little bit over, and that's great. However, the seller cannot gift you their equity to use for that right now. After you've been seasoned on title, I believe it's right around 6 months, then that equity can be yours to use, whether you refinance and use it or things to that nature. However, they cannot give you their equity or gift you their equity at the closing table to meet that. So when you are offering over value or over purchase price, you have to be wary of the fact that you're going to have to come in with that. Now, if you're putting 20% down and the appraisal doesn't come in, we can work with you on not bringing in any more money. However, at 20% down, if you borrow that, you're now going into PMI, okay? If you're coming in with the minimum down payment, then you need that and can't really go over it. See the difference? So if you're putting more money down, you can essentially use that same money, but now you're in private mortgage insurance, not putting 20% down, okay? So there's a little bit of the caveat there. You want to purchase can never finance your closing costs and prepaids. Those always have to come out of pocket. A lot of people get that confused because they'll say, well, I talked to my friend and they rolled everything in. On a refinance, if there's equity there, you can roll in your closing costs and your prepaids or your escrow setup. On a purchase, there's no other equity there other than what your down payment is. So you cannot roll them in. So that's the difference on the closing costs and prepaids of whether you can roll them in or not. Refinance versus purchase, okay? So those are just a couple of commonly asked questions right now while people are coming in. Listen, costs have gone up over the years. And buyers are having to not only pay those costs, they also have to pay their escrow setup, which insurance and taxes have typically gone up over the last few years, making those more expensive, as well as coming in with your full down payment. So buyers are really on the hook to cover all of the costs that incurred going into buying a home. That can be a little bit more expensive, so people are being a little bit more creative, and I get that. You can get a gift from a family member for those funds down. You could even look at a 401k option. Maybe you withdraw or take a loan against your 401k. You can't just deposit the money from a buddy or from a friend or, that kind of thing and just say, hey, this is my down payment. You can't just have a rummage sale and make some quick money and say, oh, my down payment came from this. Okay, so there are some qualifiable funds that we need to verify and where they're coming from. So just keep that in mind. And again, also note that you cannot roll any of that additional appraisal gap, down payment, then it wouldn't be a down payment, or closing costs and escrow into your loan. There's no going over that 95 to 97% cap, depending if you're doing an affordable conventional product or a regular conventional product and thereafter. If you have any questions, drop them below. Let's get on the phone and have a conversation about it. I'm more than happy to continue explaining why, but I just wanted to give a quick recap on it so you knew offhand. Thank you again for joining me today. I hope you have a great day and we'll chat soon. Bye-bye.